Bitcoin is currently trading around $85,000, but what if I told you right now there's a surprising way to get exposure to it at a discount? Strategy is a company that holds an enormous Bitcoin reserve, currently valued at roughly $55 billion, yet the entire company itself is valued at only $49 billion. In simple terms, it's like finding a business with $55 billion in assets, but the market is letting you buy the whole thing for $6 billion less. Opportunities like this don't show up often, and today we're breaking down how to make the most of this pricing gap, as well as where the stock could be heading next. And beyond strategy, we'll also look at two other companies that may have intriguing upside potential based on their crypto exposure and overall fundamentals. But remember, this video is for educational purposes only, it's not financial advice. Always do your own research and understand the risks before investing. With that being said, let's dive in. Kicking off with the first stock on our list, which is Strategy. Ticker symbol MSTR, but here's the thing most people never realize. Just knowing the stock isn't enough. Two investors can buy the exact same shares, and one can walk away with massive gains, and the other could walk away with losses, wondering what went wrong. So how do you put yourself on the winning side of the equation? For me, it comes down to a simple 4-step plan, a structure that keeps emotions in check and helps you avoid the mistakes that wipe out most traders. Step 1 is to identify a high potential stock, something with a strong narrative and real catalysts. Based on my research, MSTR fits that criteria, which means we can move on to the next and often ignored step, defining an exit strategy, because here's the painful truth. When a stock is up 50%, it feels like it's just getting started, so people hold and hold until it smashes into resistance and wipes out weeks or months of gains. That's why step 2 is all about knowing your exit points before you even enter the trade. Ideally, you want to map out profit-taking zones around key resistance levels. A tool I like to use for this is the Fibonacci extension, which helps to identify where momentum often slows or reverses. This is what it looks like, and the way it works is as the price starts climbing up, these levels of the Fibonacci tend to act as resistance for the price, meaning we usually see the price go up to one of these areas, pull back a little bit, go up to the next level, pull back, and so on. Knowing this, investors using this tool like to lock in some profits around these key areas, which enables them to secure some gains and also buy back at a discount if the price retraces. So based on this, where are some areas where we could see MSTR find some strong resistance in the future and where you might want to consider taking some profits? The first price target is going to be around $259. The level above this is going to be around $356. And the third exit point is going to be up here, which is $512. There are some targets above these three as well, and I'll talk more about those in future update videos as the price approaches these three targets. So locking in some profits around these levels could be an exit strategy you might want to consider. But to put yourself in the strongest position possible, your entry timings has to be dialed in as well. That brings us to step 3, planning smart entry points. Most investors enter randomly, then panic buy every tiny dip until they run out of capital before the real bottom arrives. And then they're left wondering why they are underwater on a great stock. Instead of guessing, you ideally want your entry at key support levels, places where buyers historically step in. To map these out, I like to use the Fibonacci retracement tool, which helps to identify areas where the price has a higher probability of bouncing. Here's what that looks like, and the way it works is as the price starts retracing, these levels of the Fibonacci tend to act as support for the price before it bounces back up. And knowing this, investors using this tool like to either buy or dollar cost average down around these key areas, which enables them to have an average entry price as close to the bottom of the retracement as possible. So based on this, what are some areas where you might want to consider either getting into strategy or potentially adding more to your position? Right now the price is below most of these levels, so the current price is not too bad, but an even better entry would be around here, which is $150. So initially getting in around the current price and averaging down at the lower level if the retracement continues down to here could be an entry strategy you might want to consider. Now if you're thinking, okay, this entry point and the price targets make sense, but I don't have the time to constantly keep an eye on the price to catch it when it hits one of these key levels, then don't worry, because I've got a free solution for you. I've got this free service that you can sign up for, and I'll send you alerts as soon as the price hits one of our entry points and also our price targets completely for free. The link to join this is going to be in the description below. Feel free to check it out after the video if you're interested. Now that we've covered the first 3 steps, it's now time for the most important one, step 4, diversification. No matter how much conviction you have in a single stock, the market can still surprise you and not always in your favor. Spreading your risk is what keeps your portfolio growing even when one idea underperforms. And that's exactly why I don't stop at just one pick, so let me show you the next opportunity on my list. Moving on to the second stock, which is Robinhood Markets, ticker symbol HOOD. It's currently trading around $107, and I believe this stock could have strong upside potential as well. To get some price targets for it, we can use the Fibonacci extension tool again, which looks like this for Robinhood. And the first exit point is going to be around $169, and the level above this is going to be up here, which is $222. From where it currently is, if the price was to climb up to this target, we're looking at an upside of around 107%, which is pretty good. But we can see even higher returns if we can secure some cheaper entries. So let's now take a look at the Fibonacci retracement for this to get some entry points. Here's what that's looking like, and the first entry level is going to be around the current price, which is $106. The entry point below this is going to be around here, which is $91.93. So Hood was the second stock on our list, and you've probably noticed that I'm using technical analysis to break these down. Some people trade based on the news, others focus on earnings, and then there are those like myself who stick to charts and indicators. There are lots of different ways to invest, but if you're wondering which strategy performs the best, the one that's given me the biggest edge is investing alongside key US politicians. Over the past few years, this approach has consistently outperformed everything else I've come across. When certain politicians make moves in the market, it often signals something bigger, and being able to track that has made a huge difference in my results. If you're curious about how it works, I put together this free video that walks you through the exact strategy I use, including real trade examples and the returns it's delivered over the last 3 years. The link to this video is in the description below. Feel free to check it out if you want to see how powerful this strategy can be. Coming back to the third stock on our list, which is STCE. It's currently trading around $61, and based on my research, it could also have impressive upside potential. To figure out how much potential, we can use the extension tool again, which looks like this, and some areas that you might want to consider using as price targets are going to be the following. The first level is going to be around $84. The target above this is going to be around here, which is $104. And the third price target is going to be up here, which is $138. So as the price starts climbing up, locking in some profits around these levels could be an exit strategy worth considering. But before we can exit, we'll need to enter, so let's now take a look at the retracement for this. Here's what that's looking like. The first entry point is going to be around $59.21. And the level below this is going to be down here, which is $45.55.